U.S. Market Weekly Summary, a glimpse into November 2025. Let's dive into the latest happenings in the stock market as of November 14, 2025. If you've been keeping tabs on the S&P 500 like us, you'd know it's been quite a week. With a slight rise of 0.1%, healthcare and energy stocks have led the charge, while other sectors saw some dips. Curious about the details? Let's get the ball rolling. S&P 500, a modest climb. This week, the Standard & Poor's 500 index inched up by 0.1%, closing at 6,734.11 on Friday. Despite this slight gain, the index is still down by 1.6% for November. Yet, don't lose hope, there's a 14% increase for the year, which isn't too shabby, right? You might be wondering why the market's been so volatile. Well, the recent end of a historic 43-day government shutdown has left investors in limbo, eagerly waiting for crucial economic reports like the September employment data, which is due out on November 20th. Sector highlights: healthcare and energy shine. The healthcare sector was a star performer, with a 3.9% increase. Eli Lilly, LLY, stole the spotlight, soaring 11% after announcing a partnership with MiraGTx for developing genetic therapies. Imagine the impact of such breakthroughs on the stock's performance. Meanwhile, the energy sector climbed 2.5%. Devon Energy, DVN, led the pack, up 6.4% following its robust Q3 report. It looks like Devon's got its eyes on a stable future in 2026, thanks to improved capital efficiency. Who doesn't love a good comeback story? The positive performance in these sectors highlights how strategic partnerships and strong quarterly earnings can significantly influence stock prices. Investors are keenly observing how the healthcare sector's innovation-driven growth and the energy sector's resilience will unfold in the coming months. Challenges in consumer discretionary and utilities. Not all was rosy, though. The consumer discretionary sector took a hit, falling 2.7%. Williams-Sonoma, WSM, was the biggest loser, dropping 7.5% as it gears up for its next quarterly report. We can't help but wonder, will they bounce back next week? The utilities sector also saw a 1.2% decline. Other sectors like real estate and industrials weren't spared either, each slipping by 0.9%. It's a reminder that the market's a roller coaster, and we're all just along for the ride. Despite these challenges, the focus remains on strategic adjustments and market adaptability. Companies in these sectors might consider revising their strategies to weather economic uncertainties and capitalize on emerging opportunities. Earnings season, what to watch? As earnings season winds down, there's still a lineup of companies set to release their quarterly results. We're talking big names like Home Depot, Medtronic, and Nvidia. Are you as excited as we are? It's like waiting for the next episode of your favorite series. Beyond earnings, we're also watching the release of September's employment data on November 20th. The delay caused by the government shutdown has left us all in suspense. What will the numbers show, and how will they influence the Federal Reserve's upcoming policy meeting? Only time will tell. The bigger picture, market dynamics. Overall, the weekly sector performance paints a vivid picture of the market dynamics. Communication services slipped by 0.7%, while consumer staples managed a 0.72% gain. Energy continues to impress with a 2.77% rise, while financials and industrials saw minor declines. It's a mixed bag, and that's the beauty of the stock market, always changing, always exciting. These movements are a testament to the complex interplay of market forces, where macroeconomic indicators, corporate earnings, and geopolitical events all converge to shape investor sentiment. As we navigate these waters, it's crucial to stay informed and be prepared for the unexpected. So, there you have it, a snapshot of the U.S. market as we wrap up this week. Stay tuned for next week's developments, and remember, the market's a marathon, not a sprint. Until next time, happy investing.